All right, 2 p.m. Central African Time. You're watching Market View Text Talk, proudly brought to you by the Eswatini Revenue Service. I'm your host, Sifiso Ngumala, and on today's edition, we place a firm spotlight on an issue that matters for every employer in the kingdom, the annual Pay-As-You-Earn reconciliation submission on the TaxEase digital platform. We are going to unpack the fundamentals, what Pay-As-You-Earn reconciliation actually entails, where the responsibility lies, as well as how this year's process is changing to make compliance simpler and more transparent. We'll also track what remains consistent, highlight how to resolve discrepancies, and importantly, we are going to spell out the penalties that come with late submission. To guide us through, ERS Manager for Communications and Marketing, Duduzo Dlamini, as well as Senior Tax Officer, Tulile Simelane. You do not want to miss that conversation happening right after our business news, which begin now. All right, on our first story, Business Eswatini has officially signed a trade agreement with the Business Chamber of Benin. Speaking at the signing ceremony that was held at Emafini, Business Eswatini Chief Executive Inathi Dlamini emphasized the importance of forging international trade partnerships, especially in the context of African Continental Free Trade Area, the AFCFTA.
This is a landmark occasion for us as Business Eswatini, as we would like to spread our tentacles towards Africa against the backdrop of the ACFTA, obviously, which gives us access now to Africa. But to do that, you need partners around the region. You need collaboration. And Benin has reached out to us. As we are part of COMESA here and of SADC, Benin is part of what you call ECOWAS, a huge economic bloc, which we know little about. And having a friend in that region and them having a friend this side, we think the mutual benefits will accrue quite quickly. Benin is largely agri-driven. If Eswatini wants to go and invest in Benin, for instance, they put in 50% shareholding in that, which means it allows Eswatini to also spread their wings and invest in Africa, over and above trading in Africa.
Benin's honorary consulate unpacks the contents of the agreement.
It's a key agreement because we're talking about intra-African trade. That's trade between Africa and Africa. And in this particular instance, between Eswatini and Benin. The whole idea after this agreement now is to go to the sector level, to really go to look at products. Sugar here, manufactured product here. Benin does a lot of pineapple, just like Eswatini, not only to trade, but also to exchange best practices. Because there are really practices that the two countries can share. Benin is very much linked into the West African region. And Benin can be, for Eswatini businesses, an entry point into the West African region.
Business Eswatini has also signed partnerships with business chambers from Botswana, Egypt, and South Africa, amongst other countries. Reporting, Nelson Dlangamandla, Fuminkosi Nzinisa, Ezulwini.
Right, we'll go for a net break now. We have our conversation on the annual Pay-As-You-Earn reconciliation submission after the break with our two guests.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back and thank you for staying with us. Let's drill into the lens of annual pay-as-you-earn reconciliation submission now, a process that sits at the heart of employer compliance and one that every business must get right? We want to walk through the essentials of reconciliation, the responsibilities employers carry, as well as the new system features that are designed to make the process smoother on taxees. We'll also clarify what hasn't changed, how to handle discrepancies, as well as the very real penalties that follow if submissions aren't made on time. To help us navigate this important conversation, ERS Manager for Communications and Marketing, Duduzo Dlamini, as well as the ERS Senior Tax Officer, Thulile Simelane. Very good afternoon to both of you. Thank you for joining us.
Afternoon, Thanks, and thank you for having us.
Fantastic. Mr. Dlamini, very regular on the show now, but I want to start with Thulile. This is me just, expressing my chivalry and displaying it ladies first, as they say, right? Let's start with the basics. What is exactly this pay-as-you-earn reconciliation? Good.
Thank you, Sfiso. Pay-as-you-earn reconciliation is a process that is required for employers at the end of the tax year, that they do a recalculation of an employee's income tax on the annual remuneration earned by an employee. This is just to make sure that for each and every employee they had, the pay-as-you-earn deducted balances up with the pay-as-you-earn as assessed or as recalculated at this step. And after that exercise, employers are required to then issue tax certificates to their employees. So these tax certificates serve as evidence that that particular employee has been employed by that employer during the tax year, has earned that much of amount of remuneration and has paid that amount of tax as reflected in the certificate.
Yeah. I want to ask you, Duduzo, whose responsibility is this?
So the responsibility lies with the employer. So what we expect from the employer is to be able to file on a monthly basis. So we've got a portal or a system we use which we call Tax Easy. So that's where we expect the employers to be able to file on a monthly basis on behalf of the employees. And once they've done that, that's when the system would also be able to calculate to the year-to-date reconciliation for them. So that's what they would use to then verify and check in terms of how much has been paid and if there's any differences which needs to be paid back or if there's something which they need to add up as the employer.
Yeah. We did promise you, viewer, that we'll walk through all the essentials of reconciliation, and we did say we are going to take you from the basics. What is pay-as-you-earn reconciliation? Whose responsibility is it to carry? But also, we want to drill into other components of this conversation, and I think, truly, it's important that we talk about what is changing this year, as we did promise our viewer at home. What is it really that is changing this year in the manner that pay reconciliation is done?
Thank you. First, maybe it's important to highlight what has been happening in the past, how the reconciliation was done. So what was happening in the past when it was this time of the year where employers are expected to do the reconciliation is that the ERS would circulate an Excel spreadsheet for employers to download and then capture the information into the system. So that was really tedious and time consuming. So this new system, Tax is, as Duduzo has said, makes it much easier now for both employers and ourselves. So now they don't have to do that completion of that previously circulated spreadsheet. So the system automatically does that for them. So all it does, it just uses the monthly submissions to automatically bring up this annual reconciliation. So now all they have to do is just to check if each and every employee pay-as-you-earn deducted and the pay-as-you-earn calculated balances. So in the event there are variances, then the employer has to make good of those variances.
Yeah, if I were to start expressing to you guys how much I loathed spreadsheets, even in school, post-school, even right now, I do not want to see spreadsheets. So indeed, tax is, just by definition, makes everything much easier. And indeed, to do that sounds very efficient, right? But what happens if there are discrepancies in reconciliation?
So, yeah, but maybe let me just give it to Tuli. Maybe I'll just cover up in terms of, Tuli had covered up in terms of what doesn't change. So maybe let me just tackle what won't change as we continue.
Sure.
So firstly, the first thing which won't change is that once the employer will still continue to file for the employees, so that'll be the first thing. And then secondly, what also that doesn't change is that the employer is required or is expected to then share the certificates to the employees once the reconciliations are closed. So we do advise that employers make sure that the reconciliations are done and closed and balance up before they issue the certificates to the employees, so that it doesn't cause those discrepancies if, let's say, they issue out the certificates before the balances are balanced out on that element. And then lastly, is to just say they are still expected to do the reconciliation before 30th September, which is going to be the deadline for them submitting the pay-as-you-earn.
Okay. I appreciate that insight on what is not changing, and please pardon the direction of my previous question.
Yeah.
I suppose it does land on your designation, Mnguni. Please just, let's go at it. That sounds efficient, right, what you explained earlier. But let's speak to the question that I had asked, and I posed it to the wrong person, I suppose. What happens if there are discrepancies in reconciliation?
Okay, thank you. Yes, it's possible to have discrepancies or variances, and actually that's the whole purpose of doing the recalculation at the end of the year. So it could either be a shortfall or an overpayment. So if it happens, the employer has to top up where there's a shortfall or where there's an overpayment. The employer has to adjust. So how they do it is they do it through the adjustment of the relevant monthly PAYE returns. So that's what employers have to do, and by just doing the adjustments on the monthly, so the reconciliation will automatically balance after effecting the necessary adjustments.
Yeah, and the conversation on penalties, perhaps uncomfortable for some people. They don't want to hear it, but important that they hear it, because I suppose it then informs, what they should do in order for them to comply. But let's talk about the penalties indeed. What happens if an employer misses the deadline?
Yes, the penalties, to make sure that everyone keeps time, everyone does what they're supposed to do on time. So there are penalties associated with late submission. So now that there's not necessarily a submission like it has been happening in the past, it's just for employers to make sure that they've worked on their reconciliation by the 30th of September, as Nduduzo has said. So for an employer who will not do their reconciliation after the deadline, then there is a penalty, which is a daily penalty calculated on a daily basis, and it's 30 malangeni per day. Yes.
Any reminders, Nduduzo, before we end? I know there's been an emphasis on the 30th of September being the finalizing of annual pay reconciliation. Any other reminders there?
Yeah, so probably I'll start with, I think that the key one is also from the employees to be able to ask their employers to be able to provide them with the PAYE certificate, which does prove that your money was collected and was submitted for tax. That does help you for you to be able to verify and have that certificate with you. And then secondly, I think the reminder, you've already mentioned it in terms of the 30th, which is the deadline for us, where we expect employees to be able to do the reconciliation, and then also to remind them that on the 14th of September, it's the deadline for them to submit the pay as you earn for August, which means they need to submit it before so that they're able to do the reconciliation at the end of the month.
Let's talk to the viewer at home who has appreciated this conversation and is willing to comply, but is also wondering how to get into contact with the ERS.
Okay, so firstly, if they should be, as we were talking, that they should be expecting to get their certificate. So firstly, what you'd advise is, should they feel like there's something they're not sure of, we do have what we call our toll-free line, where they can report any suspicious things they are seeing on the ground, where they should be able to call 800-8000. And then secondly, for any other information, we are also publishing this on our social media platforms. They should be able to check us, follow us at ERS at Eswatini. And then if they do want also to email us, they can email us at info@ers.org.za for more information in terms of what they want to ask or any other information they want to get from us.
Fantastic. Ngoni Ngosi, thank you for your time. And thank you to our viewers as well for staying with us here on ERS Tax Talk. This has been our tax conversation. And just, it is a reminder that indeed timely and accurate pay-as-you-earn reconciliation is not just what you call compliance, but it's just good business practice in the grand scheme of things. So let's go for a break. We want to look at our market analysis after the break.
Let me ask you something. What if I said we could all be more productive, that we could do more, create more, or earn more without having to spend more time or effort we put into work? Sounds great, right? So how do we do it? How do we do more with less? For economists, boosting productivity is the trillion-dollar question. So what do I mean by productive? What exactly is productivity? Economists actually measure how many resources go into an economy and compare that to the value of goods and services coming out. And that's what's called total factor productivity. The better and more efficiently an economy uses its time and resources, the higher its productivity. Let me show you what I mean. What if I wanted to open a restaurant? What would I need? A budget, tools, some ingredients. Of course, you can't have a good meal without an experienced chef. Once we have those, my customers get a great dining experience, and my restaurant starts earning revenue. But there's so much more to running a restaurant than just good cooking. I have to spend time ordering ingredients, doing taxes, taking reservations, seating charts, property management, getting permits, renewing safety, managing, updating, hiring, and firing. Doing those things takes me time I'd rather spend making meals. Fewer meals means turning away customers and losing out on revenue. My productivity could be so much higher if I use technology to streamline those things. But I can go even further. Here in the kitchen, I can also use technology or hire someone to take over the routine tasks. So now I can focus on making the perfect meal. My kitchen, with all its fancy gadgets to help me out, isn't so different from how wealthy economies use technology, trade, or innovation to boost their productivity. But imagine I don't have these tools. That's a problem that many poorer countries face, and it's one that the IMF takes pretty seriously. Because without access to productivity boosters, they earn less, and so living standards remain low. There's no one solution. But we do know that investing in science, technology, and education does help our members to do more with less over the long term. It's investments in our future that'll make us all better off and give us more time to do the things we love.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back. It's 23 minutes after 2. We have Mr. Sbiya who joins us today telephonically and is going to take us through today's market indices and what they inform us about the implications that they possess. Stanley, good afternoon. Thank you for your time. In the interest of time, would you please just let us go through all the numbers?
Thank you, Mr. Ngumalo, and good afternoon to the viewer. So what we're looking at in Wall Street and basically across the world, Mr. Ngumalo, is a bit of optimism around the fact that the Federal Reserve Bank is actually going to cut interest rates in September, and then also coupled with the performance of Oracle and other AI stocks that are actually just showing that there is a light at the end of the tunnel in terms of the artificial intelligence landscape. So what we're looking into in the U.S. market is, we've seen the Nasdaq composite getting some 6 points, just breaking from its deadline that we saw in the previous few days of trade, and the S&P 500, continuing to break a new record of the 2,500 mark, with just the Dow Jones Industrial Average coming below with some 220 points, and basically just coming off of its all-time high, which just basically shows the optimism that remains in the market model that we are going to see that rate cut come September, given the way that market conditions are looking in terms of that weaker job market that we saw earlier on when it operated that non-farm payroll data that came out last week. But what we're waiting to see right now is what wholesale and retail inflation is going to come out looking like. Following the fact that last month it surprisingly just showed some signs of going down. And then going into the Eurozone, in London, Germany and France, we are seeing a bit of a positive news across the spectrum there. With Germany leading the charge, purely because what we're seeing is the Chancellor there has constituted a panel of experts to come up with recommendations in terms of how the German economy can actually be bolstered and be moved forward. And we're seeing those sentiments in the market being driven by the fact that we are also being driven by the fact that we are likely to see interest rate cuts in the U.S. next in the next couple of weeks, actually next week. Following that half a year or almost 3/4 of a year, steady interest rate, which was a bit high for market. So we do expect that to bring some life back into the U.S. market, and we know that the U.S. is one of the major export destinations for Europe. France, surprisingly, holding steady there, regardless of the turmoil that we're seeing happening within France in terms of those austerity measures. But we're seeing something coming out of the presidential palace there, to the effect that the new prime minister is somehow going to balance between the austerity measures and actually giving relief to individuals within the economy. So we're seeing relative beautiful numbers across the European markets. In Asia, we're seeing, Japan going for records, and with China again also going for records. Just with Hong Kong holding steady, but then again, what we notice with Hong Kong is they are at the record level and back to levels of, pre-pandemic levels, and they're actually above those pre-pandemic levels now, which shows that life has somehow returned into the Asian market. And we're seeing China also touting another $1 trillion stimulus into the struggling, local government sector there. So markets are also looking forward to that. And those numbers that were posted by Oracle yesterday actually also just breathe a sigh of relief in terms of investors looking for those new tech stocks, those upcoming AI stocks, to put their money into, considering that they're seeing growth. Johannesburg Stock Exchange is maintaining the record above 100,000, but we're seeing markets just, rebalancing and rebasing after that rally that we saw that came when we saw those GDP figures showing that, the economy actually grew larger than expected, and that growth was coupled by, we saw that consumer spending together with producer spending was also on an increase in markets. I just are waiting to see how that is going to happen. But we're seeing the performance of the metals today, just a bit sluggish, though they remain a bit above, the record level. When you go into those metals, normally you realize that gold has just taken a few points, shaped a few points off, and Brent crude oil again has shaped a few points off. That's because with Brent crude, in as much as we are seeing those issues within Russia, Ukraine, and the Israel onslaught on Qatar, but there are heavier demand worries on the market more than just the supply shock. So that's why we're seeing that paradoxical movement in terms of the price of Brent crude oil. But gold is actually just stabilizing at that level, showing that we are expectant of an interest rate cut next week. And when you look at the Treasury bond yield, it also just shows signs of a market that is ready for an interest rate cut. And in terms of the currencies, we've seen the Langen gaining strength against the dollar and also against the Japanese yen. But just losing a bit of ground against the euro when you look at those sentiments within the eurozone, and with that, the ECB expected to cut interest rates, this month, so all those factors were for the European market. Thank you.
Thank you, Mr. Spear. Thank you indeed for your insights. We have come to the end of the show today. Thank you for staying with us. Enjoy the rest of your day. Goodbye.